600. You might just think that your losses are always the market's fault, from the news to volatility to the reversals and all that stuff. But the brutal truth is that even the most perfect setup that's waiting right there with 600% gains, waiting for you to just snatch it right up, can still be completely messed up. And most traders don't even realize that. So chasing after better setups, better strategies, and better indicators may not be the problem, because I see it every single day with students who are legitimately intelligent in trading. They know how to trade. They know their setups and their risk. They know their trading math. It's all there. And yet they keep blowing accounts. The why is because the trade itself is not the problem. It's how they approach it internally. And by the end of this video, you're going to see why any trade, no matter how clean, how A+, how perfect it is, can still be ruined, and what to do instead of just throwing more money at it. If you hear what I have to say on this topic, make sure to subscribe to this channel and smash the like button so that you don't miss other videos like this. And if you want to take this topic deeper, I have a private training you can watch for free. It's the first link in the description box. I'm going to break this video down into parts. Part number 1, the market is not your enemy. The market doesn't care about you. I'm so sorry, but it's not out to get you. The reality is most traders are going to blame the market anyways. But if you actually think about it, every single loss you've ever had, doesn't matter how many of them, but were they all because of the market? Sure, some news hit that you weren't aware of. There were some setups that were invalidated, but the majority of blown trades and losses are you. It's your behavior. It's your approach. It's your internal state. And I want you to take a second and really consider that. Any trade, perfect or not, can be ruined if your brain is in the wrong place. And the part that shocks people is that you can know how to trade and still be in the wrong state. That's when the greenest trades turn red. And that's when your discipline is going to collapse. And when you justify just one more trade or justify over leveraging. Part number 2 on why your internal state is going to change everything for you, because it changed everything for me. I call it your internal state. And what I mean is the way that your brain feels and reacts while trading. Are you focused? Are you calm? Are you neutral? Are you carrying a frustration? Agreed. There's some boredom, fear from the last trade. It doesn't matter, but even one tiny misalignment in your state is enough to blow a trade. It doesn't matter how perfect it is. You can see all of the signals and the math and the risk, and it will not matter if your brain and your mind is not aligned. You will make decisions you don't even notice until after the fact. But most traders don't even stop to check this. They trade because they know how. You know how to trade. They think that's enough. You know how to read a chart. You think that's enough. But the thing is, knowing how to trade is not the same thing as trading with intention. And so if you keep thinking your losses are the market, you're never going to get this. You're always going to blind yourself and feel like, oh, it's the market's fault. You're never going to actually want to look at this. But the market is a mirror of your internal state. And every loss is a reflection of the trader that you brought to the market. And the myth of fixing the loss, which is part 3. This is where most people get trapped, because you take a loss and your first thought is, I need to get this money back. So you add more money to your account, or you push your leverage, or you reset your account and you push harder and you chase setups. And the worst part is that you feel like this is logical, because it is, because you already know how to trade. So why wouldn't you go? If you know how to trade, why wouldn't you just go back and try again? But the problem is you think you can brute force it. And that's exactly the wrong approach, because more money does not fix a misaligned internal state. Money can't fix that. Continuing a trade doesn't fix that. Trading again doesn't fix that. All those things do is stack more mistakes on top of the first one. And the kicker, really the funny part, the better you get at trading, the easier it is to lie to yourself. Because you can see the setup, you know the math, you've done this before, you've made profitable trades. You can rationalize literally everything. You can literally rationalize something that's completely misaligned. And that's where even the most profitable strategies are going to fail, when your state is not aligned. I made a video about the 2 types of losses. There's only 2 types of losses. A loss is either the market invalidating a perfect setup, or it was you breaking the rules. There's only 2 types of losses. The critical insight is that neither of them are fixed by taking another trade. None of them are fixed by adding more money or reducing or increasing your risk. Your job is not to fix those trades. Your job is to align yourself before the next trade. And in that video, I go deeply into how to do specific solutions for both types of losses because they're not the same. You might be trying to fix one type of loss with a different type of solution and it's never going to work. So watch that video to know what strategy to use for what type of loss. But the market is literally a probabilistic environment. Nothing is broken in the market. The companies and industries and the institutions making multi-million dollars every day don't care about your 10K month. They're not trying to get you out of the game. Nothing needs to be fixed because nothing is broken. And when you lose, actually nothing needs to be restored. The only thing that matters is your execution over time. And that starts with you, not your trades. Part number 5, how to actually start aligning. So how do you stop blowing accounts even when you know how to trade? You start by checking your internal state before every trade, mentally, physically, emotionally. You ask yourself very simple questions. Am I trading because I want money? Am I trading because I need validation? Or because I'm bored? Or because I'm calm? Or actually, I feel really neutral. I'm just ready to execute my plan. Because if you're not aligned, don't touch the charts. Even if the setup is perfect, because you will mess it up and you will leave your money on the table. You'll leave profit on the table. You'll make profit and go give it back. And even if that opportunity seems huge and you don't want to miss it, you're so much better off waiting until you feel neutral because it's cheaper to trade that way. It's a very expensive problem I'm solving on this channel. And this is not about discipline. It's about structural alignment. It's about actual structure. And your nervous system will guide your success or guide your failures if you let it. But if you want me to walk you through the exact framework my students use, and I use it too, to stay aligned, stop overtrading, I want you to check out the free private training that's linked in my description box. It's the first link in there. For part number 6, we're going to discuss some common internal traps. We're going to talk about some red flags. You can watch this video for the top 10 red flags of traders who are about to blow their account. Here's what I see every single day. Traders who are experienced and know how to trade, but still blow accounts because they ignore internal flags. Though number 1 is emotional entanglement from previous trades, 2, overconfidence after a green day or a green week and you ignore risk, you risk everything. Number 3 is frustration after a loss and trying to go get it back immediately. Number 4, being ego-driven, having ego-driven trading, proving that you're right instead of trying to prove yourself you can follow the rules. And number 5 is lack prioritization. You are trading for excitement, not strategy. You actually care more about these opportunities instead of your profit. That's just a summary. I recommend you go watch the 10 red flags video. But if you recognize those flags in yourself and they pop up, you can actually change them in real time. And that is where your P&L actually starts to show the trader you actually want to be. The truth is so simple that any trade can be messed up. If your internal state is off, it doesn't matter. The most profitable traders succeed not because they're smarter or luckier. They succeed because we can control ourselves. We can control the thing that matters the most, and that is ourselves. So we're going to stop blaming ourselves and we're going to start just observing ourselves and catch ourselves in real time. If this video hit home for you, I have the free private training that walks you through the exact alignment steps, the exact checks, alignments, and frameworks that my students use to stop overtrading and start trading as a neutral trader. The link is in the description, and I invite you to watch it right now. It's a very short video, about 15 minutes. Grab a snack and watch it before the day is over. One loss does not blow an account. It's what happens after the loss that blows your account. This video is about something almost no trader is taught directly, how emotion carries forward when nothing is there to stop it. And it sounds like such a soft topic that makes little to no difference, but I'm telling you, the traders I work with have done a complete 180 because the first loss isn't the real damage. It's the shift it causes internally. So when you take a small loss, it's fine. Mathematically, you didn't blow the account, but it shifts you inwards. And after the first loss, something subtle really happens. You start to feel very lost. You start to feel very off. You feel behind. You feel like you need to fix something. That is our human nature in our brain saying, I need to fix it. And the only way your brain knows how to fix a loss is to go back and make another trade. And that feeling does not disappear just because the trade is over. Just because the day is now a new day doesn't automatically make you a new trader. You have to consciously do this stuff. So instead of stopping, you keep trading. Not because the setup was really great, but it's because when you stop trading, it feels worse because now you can't fix what you want to fix. And so now you're no longer trading the market. You're trading the feelings, and you're trading how you feel about a trade that's already gone, and likely a trading day or a trading week that's already in the past. If you think about, I have my Starbucks here today. If you think about spilling your coffee on yourself in the morning before work, right? For those of you who have a job, the spill is not the catastrophic part. But now you spilled it on your shirt, you're probably going to be late. So you feel rushed, you feel distracted. You're like, dang, this is not part of my morning. Now you feel so annoyed. And after that, everything else in your day is going to suffer. All of a sudden, you reach all the red lights. And now your boss wants to have a meeting with you, right? But that is exactly what happens in trading. It's not the small loss. It's everything that happens after it based on your emotional state when that loss happens, when that coffee spills. So again, most traders are aware of this. You know how to trade. You're aware of this because you journal. Oh, I revenge traded. Oh, this was emotional. I should have stopped right here. I should have got out right there. In your journaling, your awareness is never going to be the solution. Ever. Most stable traders do not push through bad days. They stop early. This is what we do. When we feel like we are becoming unstable, the laptops close. It's not because we're weak. It's because we understand momentum. And that if we keep trading, when do you stop? There has to be something that interrupts that behavior. So if you've ever thought, oh, I should have stopped after that first loss, I want you to comment the words first one. Because if you should have stopped before that first loss, why didn't you? You knew it. But one bad trade does not define the entire trading day. It's what you allow after the loss. Whatever follows that is what actually dictates everything else. Two traders can look at exactly the same chart, the exact same market, the same candles, but one pulls out money and the other one is giving the market money. They're going into debt, or they're just simply walking away empty-handed. And it's not the market's fault. So let me show you something really quick that flipped the way that I personally trade, because there's a line in Proverbs that talks about it's Proverbs 23:13 or 23:11. I think it's 23:13, where it talks about a poor man's farm may produce much food, but injustice sweeps it all away. And you don't really have to be religious to understand the wisdom here. So I want to just break this down, because even in the fitness term, right, I have a personal trainer, and my personal trainer has taught me a lot about how to get to my specific aesthetic goals for my body. But it's like, there might be someone else in my group, right, in my personal training, like group coaching, whatever, and I am getting the results that I want, but the other person is not getting what they want, right? Same thing. Going to the same market, same candles, one person wins, one person doesn't. Same thing with this. We go to the same coaching program, eat the same things, right? But I am actually getting the goals that I want, but they're not. In that case, it's most likely because of the way that they actually do the other half, which is the working out portion. So if we're both eating the same things, we have the same coach, we know we're both eating well, but I work out and they don't. Guess what? It doesn't matter what else is the same. We're going to get two different results. And that's really, the point is that food is not the issue. It's the actual consistency behind how the person uses the food. Because me, I'm using the nutrition to my purpose of getting the body that I want. But what they're doing is they're eating and then they're not using the nutrition, and now they're probably gaining weight, or they're just maintaining weight, looking the same, or looking worse, or feeling worse. So that one person, so that's me, I'm taking advantage of the whole system, the whole program, doing exactly what my coach tells me to do. And then they're kind of half doing it, and they're getting their half results. So think about the Proverbs verse again, right? It talks about the farm. In this aspect, the market of trading is your farm. Every single day, it produces enough opportunity because it produces trillions and trillions and trillions of dollars circulating every single day. And somebody winning does not mean that you make less money. That's not how trading works. You cannot afford to believe that. One of the myths about trading is that, oh, well, you know, we're fighting against these buyers and sellers, and if I win, then they lose, and if they lose, I win. It doesn't work that way. That's not how the markets work, and you cannot afford to be believing that, because if you believe that, you're going to set yourself up to lose so much more than you need to, because that's not how it works. How it actually works is like a farm, right? You go in, you can harvest whatever you need to, and then guess what? Everybody else gets to harvest whatever they need to. My land doesn't contradict your land, and your land doesn't contradict my land. Everybody's land is different. The point that I'm making here is that most traders do not fail because the market is unfair. They lose and they fail, or they quit before their first year is even up because they never build the thing that can collect the opportunity. Okay, that's the difference. Think about it. If you're working out and you're eating right, you're gonna get the body. But if you're eating right, you're not working out, you're not going to get the body. You can never capture the opportunity of all the good nutrients you're giving your body, right? That's literally the cheat code. Put good stuff in your body and use it the right way, and those two things together get you the body that you want. But what most traders think is they take one class, they watch one video, they practice one time a week, and then they think that that's going to translate into dollars and profitability, and it's just never going to do that. So if you actually want to be able to use the opportunity that you're looking at every single day, then my channel is definitely a great place to start. Everything is in one place, step by step, very clear for beginner traders in a playlist. But if you want to watch my real life trades, watch me trade, and basically copy how I analyze the charts and copy how I analyze candlesticks, then my watch and learn playlist will definitely be for you. So that is basically how you turn all the nutrients from the food into muscle and to being ripped and shredded. It's the same thing. Use all of your market to extract the opportunity it gives you every single day. So I'll see you guys in my next video. I believe that you can be a profitable day trader within the next year, and this is the number one reason why I believe that about you. So the reason I believe that about you is because you're on this video and you already are a day trader. Now, the difference between the day trader that you are right now and where you want to be is only one thing, okay? And it's free. It's a thing that you already have. It's a thing that you cannot buy. And it's a thing that you were given at birth. Now, the one thing is called time. You already have time. You don't get to choose how much time you get, no matter how much time you try to give yourself more or less. There's only 24 hours in a day. And so because time is something that you cannot get rid of, you already are at an advantage to everyone else who doesn't understand or know or is willing to try day trading. You already have time. That's why you're going to be profitable. Because whether you like it or not, the market is going to open every single day until you pass away, except for holidays and weekends. And that's only if you don't trade crypto. If you trade crypto, great. If you trade futures, even better. So the timeline is that crypto is more available than futures, and then options is less available than futures as far as time-wise. So if you only have a little bit of time to trade, well, the time moves in this direction, all right? So most people, in my opinion, start with options, move to futures, and they dabble between these two. Me personally, I have no interest in crypto anymore or futures anymore. I only do options because that is what I am good at, being profitable at. Okay, I'm gonna say something so simple, but if you actually want to survive long enough to make money in options trading, in futures trading, in whatever market you trade, you have to learn how to end on a good note. Not a high note, not when you start to feel invincible and you start to feel super successful and you have this ego about you. Not end when you're all hyped up and you're feeling like you're the smartest person in the earth. I'm telling you right now, if you do not learn how to stop trading, you will never be able to make it. Because money is the reward. Money is the reward that you get for your patience, for your skill, for your knowledge. Ego is not your reward. And I'm going to tell you that your bills don't take ego as a form of payment. Neither do your credit cards or any of your expenses. And most traders don't lose because they don't know how to make money. You know how to trade. They lose because they don't know how to stop making trades. You just don't know when to stop trading. And that's what this specific video is going to be all about. If you're interested in hearing what I have to say, go ahead and subscribe to the channel and like this video, because we're not talking about entries, we're not talking about strategies, we're not talking about indicators or charts, because you already know how to trade. It's about learning where to stop. I often hear this with my students in application after application for my coaching. So it's about learning where to stop, and more importantly, learning why thus far you might have refused to stop and you just feel like you just can't stop. There's this invisible pull that's been pulling you into trades. I'm gonna break this video down into sections. This first section is titled "The Skill That Nobody Talks About." You have to watch the whole video to get the full idea. But there's a skill that nobody talks about in trading. It is not risk management, although I make videos on that too. I think it's super important, but it's also not discipline. It's not patience. I've made videos about all of these things, but what's so much more important is the ability to stop trading when you're already in profit. I don't really ever see traders that don't know how to trade. It's that they make a lot of money, they make profit, and it sounds really ridiculous, but then they just lose it all. And most accounts weren't blown just from already losing. They were blown from winning. You blow an account means you're losing money. You can't lose money you didn't make. So you made money and then you went and lost it. So people are making money. It's happening every single day. And then they're giving that money back to the market. And sometimes a little bit more than you would like to. Then you make more and then you give that back too. So eventually what's going to happen is you hit a drawdown that is so deep and you collapse psychologically and you start to force trades to get that money go back green. We're going to avoid all this because the real question is not, how do I make money? Because you already have a strategy and you already know how to make money because you already know how to trade. The question is, how do I keep myself from undoing what I already made in the market? How do I keep the profit that I have already secured? The profit that's already mine? And the answer is not more rules. The answer is not more willpower. You cannot willpower yourself to securing more money. The answer is not more motivation and more speeches and more talks. It's about learning the one skill nobody talks about, which is learning how to end on a good note. I can make 50 videos about this one topic, but we're going to go into section number 2 to break it down a little more deeply, which is money is the reward, not your ego. If we are being really brutally honest, most of you are not trading for money. You might think you are, you might be telling yourself you are, but you're not. You're trading for emotional resolution. It sounds like a big word, but you're just trying to resolve your emotions through trading, right? You're trading to feel an emotion. You're trying to feel right. You're trying to feel smart. You're trying to feel powerful. You're trying to redeem yourself, feel like you're in control. And that's why you don't stop, because you need to resolve that emotion and you're choosing to do it through trading. And when you stop trying to trade, it feels like you're quitting on the emotion that you're trying to resolve. And stopping feels like a literal weakness. Stopping feels like you're leaving something on the table, which is not true. because your bills, the expenses you're required to pay every single month, do not care about any of that at all. Your landlord does not accept confidence as a form of payment. Chase, Amex, Wells Fargo, Navy Federal, no credit card company is going to accept good intentions. Oh, I tried to keep my profit. I tried. No, the grocery store, Publix and Kroger are not going to accept vibes as a form of payment. They take money, they take dollars. So in trading, I want you to remember that trading is not about anything else besides money being the reward. So every time you keep trading, after you said you would stop, you are choosing ego over income. That's it. So that's the trade you're actually making. The third section I want to discuss is that trading is 180 degrees of what feels good. 180 degrees means reverse. So here's what most people get wrong in trading. Most traders, they try to trade the way that most people live. In life, optimism is rewarded. Positive thinking helps you. It keeps you in a good spirit, a good vibration, a good frequency, right? You want to focus on the things that motivate you, and you want to focus on that silver lining, the sunset, right? In life, being pessimistic feels very toxic, but in trading, it's literally the opposite. And when I learned this actually in business, but I applied it to trading, and it works here too. Because if you try to be optimistic in trading, you're going to die. If you think every trade's going to work in your favor, you're going to die. If you ignore the downside in trading, you're going to die. If you only focus on what could go right, you're going to die. This is how business works too. So in trading, survival comes from pessimism, not emotional pessimism of thinking negative about yourself, not being depressive or whatever. It comes from structural pessimism. If you don't know what that means, look it up. The constant awareness of what could go wrong. And I'm going to tell you from experience as an active trader, it feels very bad. It feels restrictive. It feels like somebody's telling you what to do. And that's the point why we want to trade, for freedom, right? But when we have to use this type of logic to make money, it feels limiting and restrictive. But that's why it works. It's literally why it works. So I'm going to explain this deeply. In section number 4, why pessimism feels wrong. Okay? Most of you subconsciously reject pessimism, which is okay, because we're taught that we need to have good thoughts, good vibrations, whatever. And the reason why you do this is because you associate it with negativity, because that's what we're taught to do. You think that if I focus on the downside, then I'll manifest losses. I used to think like this before I was profitable. No, if you ignore the downside, you guarantee your losses. And I need you to write that down. There's a very big difference, because in trading, pessimism is not a mindset. It's not a negative mindset. It's not a mindset at all. It's an account survival tool. Your account will blow up if you do not think like this, or if you keep rejecting thinking like this. If you keep rejecting it, it's going to happen, right? It's the thing that tells you, I've made enough money today. I'm going to stop. You just had 2 great large trading days in a row. Stop trading. It tells you you're emotionally elevated right now. You need to stop. You're up for the month, you're up for the week. Stop trading. And this is where profits start to lock in for you. Section number 5, I want to discuss gratitude and pessimism are the same coin. Have you ever heard of pessimism and gratitude and thought they were different? They're not opposite. They're 2 sides of the exact same coin. They are the same coin. They're the same thing. Gratitude says, I'm thankful for what I made in trading. Pessimism says, I'm aware of what I could lose. They're the same side. They're 2 different sides of the same coin. So they both lead to the same behavior, which is stopping. Doesn't matter what side of the coin you use. If you use either side, you're going to stop. If you're grateful for what you made, you stop. If you're aware of how fragile your profits are, then you stop, especially when you understand that if you haven't sent that money to your bank account, it's still not realized. But they only work together. Those two things only work together, because you cannot be grateful and reckless at the same time. You cannot be pessimistic and overconfident at the same time. I get comments on my YouTube channel all the time. I lost money because I was overconfident. That can't exist with that at the same time. The next thing I want to talk about is why you can't stop trading when you're already up. You already made money and you can't stop. This is really the real problem, and I want to talk about this because why can't you stop when you're green? If you've already made money, why can't you stop? And I hear it all the time as the word greed. I used to call it greed. It's not really greed. It's attachment to feeling like you're winning. And you can't feel like you're winning if you stop. You're attached to feeling of being in sync with the market. You're attached to the feeling of being right. You're attached to the feeling of today is my day. I'm making so much money. You never want that feeling to stop. So you keep trading. Eventually the market will close anyways. So if the market's going to close anyways, then you're going to have to stop at some point. But even when the quality of a setup drops, even when your emotional state is going to shift, and even when your rules say that you should stop, you don't stop because it feels too good to stop. And that's exactly why you should stop. Some people think there's never enough. And this is the part that nobody really wants to hear, but I'm going to say it anyways, is that there's never enough in trading. No amount of money will ever make you feel complete. If you make $500 today, you'll want $1,000 on your next trade. If you make $1,000, you'll make $2,500 on your next trade. If you make $5,000, then you'll just simply want $10,000 on the next trade. That desire is never going to end. Don't you understand that? So if you don't consciously set your own limits, which means to think about it, consciously set your own limits, the market will set them for you and charge you market tuition for the hassle. It will. And it's going to set them violently and charge you market tuition for that. And you don't want to pay market tuition when you already know how to trade. So the hidden reason that you overtrade, I want to discuss this too. You do not overtrade because you love trading. You overtrade because you do not trust yourself to be done and to stay off the charts. You think when you close the charts, you'll probably open them back up. You don't actually believe within you that was enough for today. You actually believe I should make more while it's working because tomorrow there might not be a setup. Next week there might not be a setup. If I'm making money now, I gotta stay in and make more money. And this is the belief that is going to literally kill you because markets don't care about your momentum. This happy-go-lucky ride that you're on, they don't care. They don't care that you're feeling hot. They don't care that you're locked in. They don't care. They will flip on you whenever they feel like it. And especially if you're feeling hot, feeling all this stuff, you're not going to see it when the flip is there. You're going to be blinded. So don't blind yourself. Ending on a good note means this. You stop while you still feel good. You don't stop when you feel euphoric and your ego is on 1,000,000 and you're on cloud 10, right? Not when you feel invincible and like you're Superman or Superwoman. You just quit when you feel satisfied and you feel good and you feel calm and you feel neutral. This is something this is something a lot of people can't even do in their real lives because that emotional state is the one thing that is going to carry you forward cleanly into your next trades. That's the state you want to start tomorrow from. You do not want to start trading that next trade or that next trading day from hype and desperation and regret and all these other things because guess what? You're going to lose your money. And like I said before, your account balance is not your money until you send it to your bank account. It's not realized yet. So this is why this is a psychological skill. It has nothing to do with money at all. It has everything to do with identity. Who are you when things are going really well? When you've had 4 wins in a row? Are you someone who can actually stop and actually decide to not trade that next day to give yourself a break to breathe? Or do you always push? Do you always need to brute force, right? That answer to that question is going to determine your equity curve, aka how much money you leave with as your P&L at the end of the month. Your bills do not take ego as a payment. And I'm going to say it again because it matters. And I don't want to say it once and let it slip. Your bills do not take ego as transaction. You can feel like a genius and still be broke. I see it. You can feel like you crushed it and still give it all back tomorrow. The only thing that matters is what you keep. The only thing that matters is the amount of money that is in your P&L at the end of the week and at the end of the month. I want to talk about the real definition of discipline. Discipline is not taking trades. Discipline is stopping. Discipline is not brute forcing it when you know you need to stop. And that's the part that you might not want to practice and you might not feel like it's necessary for you. Because stopping, again, feels like weakness. It feels like you're leaving money on the table. But what you're actually leaving on the table is future loss. You're literally just leaving your losses on the table and taking your money. Wouldn't you want to do that? And I want to explain why this is so hard. And it's hard because trading is going to hijack your dopamine. Winning feels amazing if you let it. Being right feels amazing if you let it. I had to stop letting those things feel amazing to me. Seeing green numbers feels amazing. I don't even have colors on my trading platforms. I turned all of it to white, black, and gray, right? Because what happens is when you see all those things, your brain doesn't want that to end. It invents and convinces you to have reasons to keep trading. I've heard it from the mouth of my students. It's still a good setup. I'm in the zone. I can make more. I'm already on momentum. Those are not rational thoughts. Those are dopamine protective thoughts. So your body and your brain can keep rolling on dopamine. But actually, the reward is money. You don't need ego or dopamine. You need the money. So this is the survival reframe I want to give you. That's going to probably likely change everything if you want to apply it. Your job is not to make money in trading. Your job is to survive. Simply, your money that you make, money is the byproduct of survival. And every time you protect your account, you win. You're not leaving money on the table, you're leaving your losses on the table. Here is a practical application where you may have been waiting for. Here's what this actually looks like in practice. Imagine this. So you make money, you start to feel good, and then you stop. That's it. There's not much else to it, and then you can bank the money and go spend it. Not, I want to take one more trade. I need $1 more. I'll reduce my risk so that I can just convince myself I should keep trading. If I'm not risking as much as I usually do, I'm being safe. It's not that you're just gonna watch it and wait to enter. You're just gonna keep looking at the charts. No, just close the laptop and stop. And why gratitude fixes over trading is because it's a mechanical thing. It is spiritual, but it is also mechanical. Gratitude literally says, this is enough. That sentence alone would save most accounts and could literally save every blown account from never happening to you in the future, or at least reduce them by 50 to 75%. The truth I want you to hear is you do not need more trades. You need better trades. You need better endings to your trades. That's something you really should work towards in this year of 2026. And I put together a private training that you can watch right now. It is the first link in the description box. I show you how to actually set up real stopping points that actually work, that you can walk away with 3 things you can implement immediately to your trading to apply everything you just watched in this video. So one good day doesn't turn into a drawdown. Join me there and I'll walk you through the full lesson for free. Once we walk through the free lesson, I'll also show you how to do this for yourself every single day, and you'll be able to learn how to implement this for yourself for real forever. So learn how to end on a good note, and it will change your entire trading life. Be honest with yourself for a second. By the time you're analyzing a chart, the trade was already decided. And if that makes you uncomfortable, good. Because that discomfort is the point that most traders miss and makes them quit within their first year. when they're perfectly capable. So in this video, I want to explain something most traders do not want to admit. It's that the chart isn't actually where most decisions are made. The charts are just where decisions were justified. Traders absolutely love to believe that they're objective, which means things like you wait for confirmation, you follow your rules, you let price tell you what to do. We've all said those things, but that is not actually what is happening. What's actually happening is this: feeling shows up within you, and then the charts get involved. You don't automatically turn on your feelings when you open up TradingView in the morning. No, when you wake up in the morning, there's a feeling that is internally there. You do not wake up neutral, ever. You're never undecided, right? When you show up to a session to trade, you're already carrying either the good day from yesterday, the bad day from yesterday, the pressure to perform. It's the last day of the month. You want to make sure your P&L looks really great. Maybe you have some overconfidence from trading. There's maybe even some frustration that you feel, right? And once that internal state exists, the trade has already been leaning towards one direction. And the chart is simply permission at this point. And this is the part that nobody really wants to say out loud, which is fine, but it's true. You do not enter a trade because the setup was perfect. You enter because you want to be in the trade. You feel like this is the trade that's going to go great, it's going to shoot up, or that you don't want to miss out on a certain move, or you just want to confirm who you think that you are today. And the chart never decides. The candlesticks don't really decide. They just give you permission. It's just the way that you act out those decisions. But here is where traders actually get stuck for years, or they quit within their first year. It's because they get very, very aware of this. You will legitimately have a journal, and then you write things on the journal saying, I entered too early, I forced that trade, this was an emotional trade, I shouldn't have done that. And then you think in your head, oh, I see it on paper, I know what I did wrong, so now I can fix it because I know what I did wrong. But awareness was never meant to be the solution. That is why on the first of the month you can write down a problem, and then 30 days later you're writing down that exact same problem, and then a month later you're writing down that exact same problem again. It's because awareness only names the problem. When you're aware of something, you're aware of a problem, you're aware of something that you're doing, that doesn't interrupt the thing that you're doing. So you know that you're emotional, but you can still click the button, even though you're aware of it. You can recognize that you have the urge to want to trade, and then you can still go and trade, even though you know you're not supposed to. You can literally predict a mistake that you're going to make and repeat it anyways. That is not a lack of intelligence. It is a lack of containment. And you're going to journaling thinking that it's going to give you the structure and the containment that you need. But the traders that I work with didn't suddenly gain more insight. They did not become smarter or more intelligent. I only work with traders that already know how to trade. What they did is they stopped relying on awareness to control their behavior, because it simply doesn't work like that. It's never going to stop your behavior just because you now notice it. So if you've ever said, I don't know why I took that trade, and you wrote down in your journal or thought to yourself, I knew better, right? I want you to comment down below the word state and see how many people are also dealing with that same thing. And if it feels like your best intentions always disappear the moment the 9:30 a.m. Eastern Standard Time, the markets are open, as soon as it becomes Monday and now it's time to trade and all your intentions go out the window, it's because the decisions do not start on the chart. They start within you. And every day that you ignore that being the fact, it's going to continue to perpetuate itself. It's going to keep happening. So I want to give you 3 things that you can do immediately to interrupt this before the charts ever get involved. There's a private training that is linked in my description box that explains it clearly. It's free to watch. Definitely go watch it. But recording your mistakes is not the same thing as changing your behavior. So that is why you can have a journal full of insight, a journal full of records, and still blow your account. That is the gap that I'm going to talk about in today's video. You can write down the same mistake over and over, and you will still keep making it. Seriously think about that, because most day trader can literally show you a journal page that says, I overtraded, I revenge traded, I broke my rule last week, and then from last month, and then those same things from 6 months ago. So clearly, writing down these things does not fix it. If journaling automatically fixed your behavior, nobody would keep repeating the same mistakes. Because once you saw it and you wrote it in the book, you'd be like, bet it's time to stop. But that is not what happens. Most day traders don't have an awareness problem. You're aware of the problem. You know what your problem is. You know what you wrote in your journal last week, last month, and last year. You actually have a containment problem. See, you're so aware of what you do wrong, but you don't have a structure that stops it from happening again. So when people say, I journal, what they're literally saying, usually, is I record all of my mistakes. I've written down all my mistakes. But recording your mistakes is not the same thing as changing your behavior. So that is why you can have a journal full of insight, a journal full of records, and still blow your account. That is the gap. Most traders think they're journaling, but what they're actually doing is just logging data. You have a log of what you've done, and those are not the same thing. See, in this video, I'm going to show you what to actually journal, because right now you're writing down your ticker and your entry and your stop loss and your target and your risk and your P&L and your R multiple and your win or loss. You might write down how you felt emotionally, and then you say, oh, I wrote down all the things, I've journaled, done. But the really uncomfortable truth is that if journaling like that made people profitable, most day traders would already be profitable, because almost everybody does that. So why are so many traders still blowing accounts? Because awareness was never meant to be the solution. Writing down what happened does not change what you do. Just because you're more aware of what you've done doesn't mean you're not going to keep repeating it. You will keep repeating it. And most people stop there. They think that if I just see it enough times, I'll stop. And that is not how humans work. If awareness alone fixed behavior, nobody would do all the things we know are bad, like smoking and overeating and procrastinating, or in trading, revenge trading. People already know what they're doing. You know it. They just keep doing it anyways. So when a trader says, oh, I journal, what they're literally saying is, I document outcome of my trades. But profitable journaling is not about outcome. It's not about what happened. It's about your behavior. And here's the simplest way that I can say it that I'm going to offer you today. You don't need more data. You need more truth. You can log your trades. That is great to do. I'm not saying stop that. I'm saying there needs to be a layer of truth added in, because most journaling answers the question of what happened in the market. But profitable answers are what happened in me. It sounds so cliche, but the market is not blowing your account. Nobody's against you. Nobody's worried about your $1,000, $10,000, $20,000. Corporations are making billions of dollars a day. Nobody's worried about your $1,000 you're making. No one's worried about your 10K month. No one's trying to make you lose. It's your behavior. You have the same exact strategy, the same exact setup, and the same exact rules. You can have the exact same strategy, the exact same setup, the exact same rules, and true traders, two different people, will get two completely different results. Why? Because of who that person is in their internal state. That's why I say this all the time. You can mess up a perfect trade. There can be a 600% gain sitting right in front of you, and you miss it and you lose it. Not because the setup was bad, but because you were not in the right state for that trade to work out. So you were wrong emotionally, mentally, internally, and your journaling probably is not tracking all of that. So I'm going to show you what most people track, and then I'm going to show you what they should actually be tracking. See, most people track Did I follow my rules? Did I win or I lose? How much did I win or how much did I lose? That's very surface level. And that is not useless, but it's not what changes behavior. What we're trying to do here is change your behavior. What actually changes your behavior is tracking the patterns of yourself. What actually matters is not what was the ticker. What matters is what was my internal state when I clicked buy. I know it sounds so abstract, but seriously, ask yourself, how did I feel right before I moved my stop? Was I urgent? Was I desperate? Was I rushing? Not asking yourself, was this a good setup? Literally, like writing down. I was calm, I was neutral. Was I patient when I looked at it? Was I calm and neutral and patient when I looked at it? Because you can look at a trade in the wrong state and you make it look like something's there that's not there. But I want to say that because the same setup taken in two different internal states is not the same trade. This is where most traders lie to themselves. It's so easy to lie. Nobody can lie to you better than you because they say the setup was valid, which is fine. I mean, it's a 50-50 chance. Calls or puts, it's really not that hard. But were you valid or were you bored? Or were you neutral? Or were you trying to make money? And now you're trying to get back to green. Were you trying to feel better? Were you trying to prove something? Were you trying to feel like a trader? Your journal should expose that, not hide it. So here's what profitable journaling actually looks like. Instead of writing, I lost on ES negative 2 multiple, you write, I was frustrated from the last loss. I sized up slightly. I entered faster than I should have. I felt urgent. I didn't wait for the full confirmation. That's actually useful information because it shows you the real cause of the loss, not just the loss, not the market. It shows you. And this ties directly into the red flags video that I did where I talked about how certain behaviors mean you're about to blow your account. You might see yourself in a few of them. There's 10. Just watch that video right here. And those are the things that you should actually be tracking. Whichever ones you see yourself in are the ones that you need to be tracking. You can watch that video here. So if you overtrade, track what emotional state you were in before you overtraded. If you're known, you know yourself to revenge trade, track the thoughts that hit your mind right before you click. If you size up, track what story you're telling yourself. When you say things like, I'm due for a win, I need to make this money today, I think this is gonna just shoot up to the moon, I gotta get in, I think this is a good one. Those thoughts matter more than your entry price. You're arguing between a market and a limit order when your entry price doesn't really matter. It's those thoughts that are gonna create your behavior. And that behavior is what's gonna create results. And this also ties into the neutrality video that I did because neutral traders don't just look neutral. We actually track our neutrality. We're not trying to convince ourselves that we're neutral. We build a system that doesn't allow for excitement to show up. So we actually notice when neutrality has left the room. We understand when our emotions, our excitement is showing up, our urgency and our pressure and our want to do something unaligned. We see that head on and we can stop it in real time. And that's the part that you're missing. You're observing things after the fact, and so you're not able to actually change it in real time when it matters, when there's money on the line. Every single day, you should answer just this one question: was I neutral today? Not did I make money? Did I follow my rules? Did I da da da? All of that will be solved if you just ask yourself that one question, because you can make money on a bad day behaviorally, but every time you make money in a bad way, that's dangerous because some of the worst habits